Good evening to all of you and greetings of the new year. So from an MCX perspective, in the last quarter, there were a couple of developments, both on the business side as well as on the regulatory side, which have a great significance. On the business side, in the beginning of the quarter, on the 17th of October, on the auspicious day of Dhanteras, we launched the options trading contract. Now, in terms of the volumes and the success of the first contract that we had, very pleased to tell you that in spite of a fairly new design of an options contract where the development happens into the futures and therefore there is also margins which we have to collect from members prior to the development, the entire cycle went through absolutely smoothly. We had more than 300 members who have participated in the first options contract, and from the first day till the end, the open interest was a continuous build-up. So a very good response. In terms of scaling this further, there are a couple of things which we are now looking at. At the subsequent meeting with SEBI and at the CDAC, we have presented what was the experience of the first cycle. Basis that we will now be approaching SEBI for an approval for at least 4 more option contracts that we want to launch, given that SEBI's initial guidelines allowed people to look at the top 5 contracts. So we are taken the internal approvals as well, and we will be filing with SEBI for more option contracts. In addition to that, given that options is a very new product from a commodities perspective, we are pursuing some schemes where we will look to have a liquidity enhancement and a retail participation enhancement scheme, both of which we are discussing with the regulators, and hopefully we will have that in the next 1 month or so that we can look at much larger injection of volumes into the options and get that as a full-fledged product for the next financial year. In terms of the regulatory developments, there were a couple of ones which assume very significance. First and foremost, in continuing with the expansion of the market, SEBI has put out the white paper for the participation of mutual funds as well as for the PMS providers. In addition to that, SEBI has done widespread consultation on how custodians can get active in this market to support all institutional members, and all the feedback is in with SEBI. Now, in line with what has happened in the past, we expect that at the next board meeting of SEBI, this will get formally announced and the institutional market will really get opened up to commodities in a big way. The other big development was that at the end of the quarter, SEBI announced the date and timeline for what people otherwise call the universal exchange, but essentially what will mean that we as MCX will get the opportunity of looking at a new segment. We have just had a discussion at our board and we intend to look at definitely one more segment. The current view is to look at currency definitely, but at the same time we will wait for the next board meeting to really confirm which segment we are getting into. But from our perspective, it's something which has been in the offing, which is something which we have been very well prepared for, and therefore it gives us now the time and the vision to plan for it and make sure that we take the best use of these 9 months. Some of the other highlights, especially in terms of the physical deliverable side of our business, very happy to say that in terms of the gold deliveries, we've had some of the largest deliveries happening after GST. So for 2 consecutive quarters now, we've been delivering in excess of 700 to 800 kilos of gold on our contract, including some of the largest refineries in India. And as well, for the month of December, we probably had the largest deposit in terms of cotton. So in terms of the physical connectivity of our business, which is extremely important both for sustaining the open interest in any contract and also something that is extremely important in terms of developing any new contract, I think on the physical deliverable side, we have a great story, whether it is cotton, whether it is gold, or whether it is some of the other new contracts that we are looking at. Last but not the least, in the last quarter, at the end of September, RBI had allowed bank subsidiaries to become members of commodity exchanges. We are very pleased that Axis Securities has already begun, and we are in the process by which the top 5-6 bank subsidiaries will definitely become members of this exchange within this quarter. To us, this is a big opportunity to really bump up our distribution, and that's something which we will make sure we pursue in FY 2018-19. So I think those are the initial comments from my side in terms of the business and regulatory developments. Very happy to take questions, and wherever we have the answers, we will make sure we give them to the best of our ability.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star, then 1. We take the first question from the line of Anand Bhavnani from Samiksha Capital. Please go ahead.
Good evening, sir. Sir, with respect to derivatives, commodity derivatives market as a size of a country's GDP, in one of the presentations on our website, you given examples of various countries, like in UK it is above 6, in case of China it is 1, in case of Australia it's 0.12. So different countries, due to structural features, have commodity derivatives markets which are either very big or minuscule as compared to their GDP. Sir, how do you see in the long run this panning out for India? At what kind of ratio do you think we might reach in the long run?
So our view is that in the long run, a number that we should be looking at is probably maybe a bit lower than the US, but definitely in the range that you have of Malaysia, China today, which means that if today we are looking at a US which is at somewhere in the range of a 2.4, China is at 1.98, as you said. Malaysia is something which is very close to the Indian number. So to us, the aspirational number will be to basically be in that China-US range. We believe that's definitely doable, especially with the slew of reforms that we've seen. So institutions getting allowed, options being allowed. There's already a discussion on how index can be allowed, bank distribution opening up. All of these are things which were not there for 13 years in this market and have all happened in the last 9 months. We believe that should be the reason why we should be looking at a size of the Indian market which is in that range of what the China-US is.
And sir, any of these international markets have tax which is analogous to CTT? Just wanted to understand structurally how they are similar or different.
So structurally, I think CTT is unique to India. It's not something which is prevalent elsewhere, and that probably is one of the reasons why, when we did not have all the other developments, that became one of the reasons why our turnovers fell. But we believe with a lot of these developments which have happened over the 9 months, the growth will come back to this market.
And sir, finally, one last question. Sir, any discussions with the government to, incentivize hedging on Indian exchanges? Currently, a lot of large corporates, they find it liquidity-wise and transaction tax-wise better to hedge it internationally. And RBI does allow them, given if they have sufficient underlying businesses. So that actually takes away volume from MCX. So any discussion on those lines and what can be expected?
So I think amongst the things that you mentioned, I think, we've never said that, you should not allow the underlying clients to make use of the best market where they get what they want. And from that perspective, if today somebody is using an international market, that's not something which we are lobbying against. What we really want is to make sure that the Indian market is at par with the international markets. And there we believe the long term is in parts. One, the institutions coming in, and for that it's multiple reforms, of which custodian was one integral part, which also is hopefully getting addressed now. Institutions will create the demand and the liquidity that we need in the slightly far end of the contracts. On the other aspect, yes, tax is something which always has played a role. That has been a request that we have always had. This year in our representations to the ministry, we have stressed, and knowing the history that there has been a reluctance to look at CTT, there is also a section 88E, which is something which all our members have been asking for. So, restoration of the benefits under section 88E itself would be a big jump, and that's something which we have represented to the ministry.
Okay. Sir, I'll come back in the queue, but before I come back, I just would request you if you can elaborate on section 88E. I'm not sure if I as a participant and investor and others understand it well, so if you can just...
Okay, so when, way back when STT was introduced, what you paid as STT, you could claim as advance tax payment. So in a way, it was offset against your income tax liability. That benefit was taken away somewhere in the year 2008. When CTT was introduced, therefore, that benefit was anyways not available either for STT or CTT. And what we therefore asked is that what people pay as CTT or STT should be treated as a part of advance tax and help people reduce their tax liability.
Okay, fine. Thank you, sir. I'll come back in the queue.
Thank you. We take the next question from the line of Arihant Bardia from Catalyst Global Equities. Please go ahead.
Good evening, Nikank. I'd like to understand with respect to the universal exchange license, it's likely to increase the competitive intensity. Why do you think that it is not going to impact your revenue significantly?
So one, yes, competitive intensity will go up. I think there's no doubt. Now the question is that, again, we already know that some of the exchanges have indicated what is their likely strategy, which is more going to be driven by sort of a predatory pricing. But from that perspective, we've been through this cycle once where 3-4 years back when there was the crisis at MCX, competition tried by sort of giving extremely low pricing to move away liquidity. So that's not the only way and not the only reason why liquidity moves away. So yes, competitive pricing will force us to give some discounts, but it's not as if it's going to completely dry up the revenues. And in the meanwhile, if all the measures that have happened in the last 9 months go well, if we are able to capitalize on that and grow the market itself, the pie will grow much larger, and therefore, and I think there are so many examples in India where competition has really grown the pie and not really eaten away people's cake. So I think that's the reason why we believe that overall the market will grow, and that gives enough opportunity for all of us to play in it.
So you are believing that the market will grow in that much size that overall your volumes will not get impacted?
Yes.
Okay. My second question is with respect to the options. Now, I'd like to understand what is the kind of revenue you're targeting, say 3 years down the line from options, and would that by some way impact your futures volume as well?
So there are a couple of things which we need to understand when we look at how we want to get a feel of options, both revenue potential as well as volume potential. One, except for equity index, I don't think there's any other number where options to futures ratio is a very, very high number. Internationally, options to futures number is even in mature markets at 20%. Our view is that in the long run, especially after index has also been allowed, in the commodity spectrum, maybe the options to futures revenue volume can be something in the range of 50 to 60% at a healthy ratio. We are targeting to get to at least 20% in the first 6 months of the contract. Now, having said that, if you then factor in the pricing that happens, and because options you pay on the premium and not on the underlying, the overall impact to revenue in a longer term, 3 to 5 years, is probably in the range of 15 to 20%.
Okay. Yeah, I think that's it from my side. Thank you so much.
Thank you. We take the next question from the line of Kunal Shah from Edelweiss Securities. Please go ahead.
Yes, sir. So particularly with respect to the...
excuse me, this is the operator. Mr. Shah, may we request you to use the handset, please?
Yeah, sure.
Thank you.
So particularly with respect to the activity levels, despite the positive movement in the commodity prices, or at least they in fact being stable all through, still the overall volumes are slightly lower. So maybe when we are saying that maybe overall we would look to expand the market, but I think as against the expectation, maybe Q3 was not that exciting, and even as we go into January, the activity levels are not that high. So how do we look at this? Maybe it's somewhere around 20 or 1,000 crores for pretty long, despite all the efforts which have been made.
So I think already the January numbers, if I just look at the last 10 days, is roughly 10% up. It's been close to 22,100 in the last 10 days. The second thing which we'd like to point out is that one of the continued weakness in terms of the volumes has been the Boolean set of contracts. So, in spite of having a very good number on base metals, which are up more than 20% on year-on-year basis, energy, which is not down too much, but it's really the Boolean which has taken away. And there we are, again, looking at the indicators, we seem to be poised for a sort of clear rally in terms of all the Boolean volumes, but in terms of the numbers impact, I think Boolean is the reason why you've seen the subdued numbers in the last quarter as well. And coming back to what has happened, like I said, since January, it is already up 10%. And just in terms of what we are seeing, in terms of the numbers in the last couple of days, even on the options contract, on the days when there has been a little volatility itself, the options contract typically tends to do about twice the previous day's volume. So interest is building back, and we are absolutely sure that this trend will continue as we progress during January.
But what do we assign this rationale to in terms of Booleans also?
Excuse me, this is the operator.
Yeah, so sorry. How do we see in terms of the rationale behind it? Because I think when we look at the prices, be it on a year-on-year basis or maybe on a quarter-on-quarter, it's almost flat. Okay, but still, like in a volume term, it is almost down, like say more than 30-odd%. So what is it? Which kind of activity levels is actually coming off? Is it speculation, arbitrage? What is happening out there?
So I think since predominantly it is the Boolean segment, that segment continues to face issues which don't seem to go away. We had demonetization, we had GST, we had PMLA, and all of which is continuing to add to the woes of that underlying segment, which is what is sort of creating a downward trend. And our belief is that as that segment really stabilizes, and as more and more people move into the regular and the organized market within that market, we will see the upside. So participation is not going down. The other thing you must appreciate is that in the Boolean segment, volatility has been at probably the lowest in the last 6 to 7 years, and that's another reason why Boolean volumes are really very low. So very low volatility, impact to the physical market, and that together has created a sort of real low for the Boolean segment.
Okay. And just lastly, in terms of this bank subsidiaries, so now be it in terms of all the securities, the way you highlighted in terms of Axis, so maybe in terms of be it HDFC or say ISEC or Kotak Securities, everyone could now become the member of COMEX and they can start trading on that. Is it that way?
Absolutely correct. Absolutely correct. And that's what we said, that if you look at the top 6 or 7 bank subsidiaries, we expect all of them to be our members definitely within this financial year.
Okay. Okay. Cool. Yeah. Thank you.
Thank you. We take the next question from the line of Hiten Jain from Invesco Asset Management. Please go ahead.
Sir, a QOQ basis, your other OPEX is up 20% and your other income is down 36%. So basically, other OPEX has gone up from 10.4 crores to 12.6, and other income has reduced from 24 to 15 crores. So what happened in these two line items?
So I come to the income very quickly, but which line item are you looking at?
Other OPEX, other expenses.
Okay. So, few things here. So let me just address the expense part. One, we've sort of maintained from the beginning of the year and right till now, and we are very confident of this going forward, that if you take away the variable expenses, and variable expenses in this case is the line B that you see in the results that we have put out. So the 4B, that is the variable expenses. Everything other than the variable expenses, we are absolutely confident that the full year number for this year will definitely be lower than the full year number of last year. Having said that, within the quarter, we had definitely a one-off expense, all of which was towards member engagement. So we had a couple of activities for our member engagement in terms of basically some activities that we do with members. So we've now started, and on a full year basis, these are 4 activities that we continue to do. We have an annual awards function. We have an annual meeting which is conducted where we also include that with some sort of an off-site visit to a location. We also have the India Commodities Day which we organize. Again, these are all activities which we believe deepen our engagement with the market. From a timing perspective, 2 of these happened in the last quarter, and that along with options launch is why you see a 2.2 crore jump there. But rest assured that in terms of the overall expense line, we will definitely come at or below what we were for the full year last year, for the full year this year, except for software support charge and product license fee, which is completely linked to revenues. On the other income, as you would be aware, there has been a steep increase in the bond yields. What this has done is where we have investments in mutual funds, and especially where we have investments in mutual funds in the debt segment, about 83% of our portfolio is subject to mark-to-market risk. That particular piece is what has given a negative return over this quarter. Also because we have been holding some of these instruments for quite some time. So if you look at these individual instruments, they probably have from inception till now returns of excess to 9%, but we can't liquidate them because we will end up playing short-term capital gains. So it's not something where we could have reshuffled our portfolio and got out of it. At the same time, that's the reason why the other income is down. In terms of, I think, the debt markets, this is a phenomena which everybody in the financial services is going to go through in this quarter because of the divergence in the yield curve and the sharp rise that we saw in the bond yields.
Oh, all right. Thank you.
Thank you. We take the next question from the line of Anand Iyer from Canara Robeco. Please go ahead.
Thank you for taking my question. Sir, just based on your past experience in terms to transaction charges, what is the sensitivity of transaction charges to the impact on market share on volumes? I'm asking with respect to say commodities where it would be common commodities between NCDEX and MCX.
So Anand, a few things on this one. One, there are very few common commodities, so I think it's very difficult to get that correlation. Second, I think if we take the 2 or 3 times when people have done this, one, let's just go back 3-4 years when competition dropped prices drastically compared to what we had. Did it really impact liquidity in any big way? No. What it does, however, is that it forces you to probably react and respond more in terms of market sentiment and in terms of ensuring that your members don't feel very upset. We went through, as all of you would recall, a price hike which we did in October last year. While it's difficult to again segregate events because almost immediately after that there was demonetization, but if you take the 40-45 day period between when we did the price hike to the demonetization date, we believe that we were able to do the hike that we did last time with a corresponding drop of, so we had a hike of about 20-25% on the fees, but the drop in volumes was close to 5%. So yes, there is a sensitivity both when you raise fees as well as when you drop fees. But we believe that there is no very scientific way of saying that if you drop them X, you will get a Y result.
But it's safe to assume that in case any of your the new competitor enters and it substantially reduces the transaction charges, you will be forced to match the price.
So, going back to what I mentioned about the 3-4 year experience, we will have to respond with some definite reductions, but I don't think we will have to match.
Okay. That's all from my side. Thank you.
Thank you. We take the next question from the line of Sagar Lele from Motilal Oswal Securities. Please go ahead.
Hey, Mrugank, in the beginning, in your initial remarks, you suggested pursuing some schemes for liquidity enhancement on the options front. Could you elaborate a little more on that in terms of what they could be?
So, essentially, we are looking at 2 or 3 aspects on the liquidity enhancement. One, we want to look at a market making scheme where the focus will be on ensuring that there is liquidity at all points of time on the various active contracts that are there. So, the scheme is designed looking at that as the aspect and not really turnover. So the focus is on making sure that there is a bid and ask available with a specified spread and nothing more than that at all points of time, and it's a performance that the market maker will have to do. We are also looking at some few things in terms of additional incentives for especially the retail, where the incentive is more for activating clients and not really to make them trade, as well as some incentive for open interest build up. So those are the 3 aspects that we are looking to do as we look at the liquidity enhancement scheme.
Sure, thanks. That's it from my side.
Thank you. Next question is from the line of Ajit M, an individual investor. Please go ahead.
Hello.
Yeah, we can hear you.
Hello.
Yes, sir, you may go ahead. You are audible.
सर मैं हिंदी में बात कर सकता हूँ.
हाँ, बोलिए.
सर लगातार मार्जिन में घट रहा है. अभी 2 साल से हो गया. अभी मार्जिन में घट रहा है, प्रॉफिट में कम आ रहा है. और बीएसई यूनिवर्सल एक्सचेंज चालू होने के बाद कुछ फर्क पड़ने वाला है आप हमारे ये इसमें कंपनी में?
तो मुझे नहीं पता कि आप किस मार्जिन की बात कर रहे हैं घटने में.
नहीं, प्रॉफिट लगातार कम हो रहा है. वॉल्यूम तो नहीं दिख रहा है और प्रॉफिट में भी कम आ रहा है. और बीएसई एक्सचेंज और यूनिवर्सल एक्सचेंज जो चालू करने वाला है ना, उस टाइम हमारा बिजनेस में फर्क पड़ने वाला है हमारी कंपनी में.
तो मैंने जैसा अभी तक पहले भी बोला है कि बीएसई या किसी दूसरे एक्सचेंज के आने से हमें ये नहीं लगता है कि हमारा वॉल्यूम में कोई कमी आएगी. दूसरा, कोई भी नया कंपटीशन आने से हमेशा मार्केट बढ़ा ही है, ओवरऑल मार्केट घटा नहीं है. अब हाँ, उन्होंने जिस तरह की प्राइसिंग वो करेंगे उसमें हमें कुछ तो रिएक्शन देना पड़ेगा, लेकिन क्योंकि हमारा कॉस्ट बेस बहुत अच्छी तरह मैनेज हो चुका है, इसका ज्यादा इम्पैक्ट हमें नहीं आएगा.
सर नहीं, वो ऐसा नहीं करने वाले सर. वो हमारा जो स्टॉक रहता है ना बीएसई में, उस पर भी मार्जिन में वो हमें इन्वेस्ट करने के लिए बोलने वाले. अभी हमारे पास जो शेयर्स है प्रॉफिट में, हम शेयर्स में जो लेके बैठे हैं, वो अभी हमारे यहाँ आपके यहाँ जो हमें खेलना पड़ता है, हमारे यहाँ इन्वेस्ट करना पड़ता है, तुम्हारे यहाँ वो मार्जिन मनी देना पड़ता है मुझे. अभी तो बीएसई चालू किया तो अगेंस्ट शेयर्स के ऊपर अगेंस्ट वो देने वाले ना हमें खेलने के लिए. तो वो
मार्जिन के लिए आप जो बोल रहे हैं, जहाँ तक मैं समझ पा रहा हूँ आपका सवाल, आपको ये आज भी आप कर सकते हैं. आप आपके ब्रोकर के पास आज भी मार्जिन रख के उस पर ट्रेडिंग कर सकते हैं.
नहीं, मार्जिन यानी कि नहीं, अभी तो हम पहले से शेयर मार्केट में 94 से जुड़े हैं. अभी शेयर का भाव अभी समझो 40 रुपए को एक शेयर ले लिया और 500 रुपए हो गया, 1000 रुपए हो गया, और उसका 10 लाख हो गया और वो बीएसई के पास पड़ा है. वो हमें मार्जिन के लिए वो देने वाले ना. तो अभी एमसीएक्स में वो होने वाला नहीं सर. हमें अभी कुछ तो लेना होगा, तो गोल्ड ऑप्शन में लेना होगा, तो हमें मार्जिन नया से देना होगा. मुझे पैसा नया से देना होगा. वो उसके लिए क्या आपने क्या इंतजाम किया है?
सर मैं सवाल कुछ ठीक से समझ नहीं पा रहा हूँ, क्योंकि अगर आप ट्रेडिंग करते हैं तो आप बीएसई को कोई पैसा नहीं देते हैं या बीएसई को कोई शेयर्स नहीं देते हैं. आपका पैसा और शेयर्स किसी ब्रोकर के पास होता है.
हाँ, ब्रोकर के पास ही होने वाला ना, ब्रोकर के पास ही होने वाला. लेकिन वो उसका फायदा हमें देने वाले ना, उसका इम्पैक्ट हमें हमारे मल्टी कमोडिटी एक्सचेंज में पड़ने वाला ना इम्पैक्ट.
सर अगर आप ठीक से समझें तो जो आपका ब्रोकर है आज भी, वो आपको आज भी एक गोल्ड में उसी शेयर पे ट्रेडिंग करने के लिए दे सकता है.
अच्छा,
आप अपने ब्रोकर से ठीक से बात कर लीजिएगा.
अच्छा, ओके सर. थैंक यू सर.
Thank you. We take the next question from the line of Ashi Anand from Allegro. Please go ahead.
Yes, hi Mrugank. My question was, there's a belief that post demonetization, the fairly sizable debit trading market could actually move towards organized exchanges. If you're looking at volumes, it doesn't really seem like that has happened in the case of commodities. Just wanted any thoughts around this?
So Ashi, right, there was an expectation that post demonetization, the sort of whatever white economy or the regular economy would grow much faster as compared to the people who are not paying their taxes, etc. However, that has not actually realized in any ways, and that's true probably not just for our market but for any other part of the economy as well. So clearly, there hasn't been a significant change. We don't know whether the people who used to be doing what is, as you mentioned, called dabba, don't do that anymore, or whether they stopped trading there but they haven't come in here. But yes, it hasn't had any impact in terms of people moving in to the organized trade.
Okay, perfect. Just secondly, you mentioned institutional participation in the SEBI white paper for MFs and PMSs. As I understand, AIFs are already allowed. Any sense in terms of what's been the kind of how has market feedback been on AIFs on commodities?
So I think while AIFs were allowed, one of the things which, as you would know, for institutional participation is mandatory is the appointment of a custodian, and the custodian regulations have unfortunately not been changed in tandem with that change in the AIF regulation. So today, while AIFs are allowed to participate, most of the custodians in India, especially because a lot of them happen to be bank entities, are not in a position to actually support them. So that is one sort of bottleneck which we are all trying to work with SEBI and address, and we expect that will be taken care of when the next round of changes are announced by SEBI. To us, that is probably the biggest reason. There are other concerns which the AIF community has expressed, especially in terms of some of the investment norms, but I think that SEBI will look at once they see how much trading is really happening.
Okay, excellent. And you're expecting the custodian issue to be taken up, say, over this next one quarter, hopefully?
Yes.
Okay, great. Thanks a lot, Mukul.
Thank you. We take the next question from the line of Prakash Kapadia from Anived Portfolio Managers. Please go ahead.
Yeah, thanks for taking my question. Udank, on the bullion side, you were explaining to an earlier participant. So contrary to what, larger organized players have reported in terms of sales or, the strong outlook in terms of, bullion and they benefiting as compared to, the unorganized guys. So that seems like, a bit of contradictory because, you look at any larger player who is in the bullion segment, they seem very, very bullish from not only, what reported numbers, but a strong outlook going forward. So why is it not reflecting at our end? And in addition to that, if I look at, metals, crude, directionally, all of them have gone up. So unless and until, that doesn't reflect into ADT, so I can't understand this jigsaw.
So I think in terms of directional price directly resulting in volume, it's not always true because the directional flow has to be backed with similar volatility. So it's in the base metals that you see a lot of volatility over the last couple of quarters, and that's where you are seeing some increase in the volumes, but you don't see the same volatility in all of the energy segments. So NG, for example, clearly during the winter seasons has an upside and always goes up, and that's what it has reflected this time as well. To your question on bullion, and I'll be very honest, it's something which we are ourselves trying to understand. To the extent, and we've met a lot of jewelers in the last couple of months as we are working towards the options launch. Our understanding is that while the larger participants subsequent to demonetization and GST have actually sort of reaped the benefit of being organized and therefore getting the upside of all these reforms, Probably it is the participants who are not in this bracket and who are not really in any ways participating and benefiting from these reforms are probably shying away from even participating in the derivatives market. So that's a hypothesis, but it is just possible that because of the deep linkages that GST has in linking everybody across the value chain, maybe some participants are hesitant to come onto the platform just now, which they were doing earlier. But as you rightly said, we ourselves see the large participants who use MCX, their volumes are growing, but the overall volumes are not coming through. And we believe that is because there is still enough in the bullion segment which is not in the organized sector.
Okay. And, gold options, what is your, feedback from some of the participants? Because, post that Dhanteras, I think we were hitting some 3,500 in October. So it's been trending down and, we are down to, I think, at the current rate, maybe less than 1,000 crores. So what will change this? Will it be rupee depreciation? Will it be volatility? How will this, spike come? What was... Obviously, you talk about volatility, so it is just going to be volatility or currency, because globally gold seems to be doing okay recently.
If I just get it correct, there are two parts. One, if you're talking about the futures volume, definitely it is linked to the low volatility that has gone down, and we believe the volatility is coming back, and therefore we will see volumes come through there. If your question is towards the options, I think there are two things that we will need to happen. One, clearly when we are competing in terms of share of mind from the trader community, we have only one options contract, whereas they have 6 or 7 or maybe 8 contracts from the equities and other world to look at. So clearly one strategy is to make sure that we are able to launch more options contract. The second is that retail, as we all know, doesn't get activated in one single day. It takes time to build up, and we believe that build up will take like a 3 to 6 month period, and that's the one for which we are now going to make sure that we are also able to incentivize the market to get retail conversions happening. So options turnover, I think, is completely linked to the retail growing to the extent that it becomes sustainable, and also our ability to provide some sort of a liquidity enhancement initially. And third, getting more options contracts. But on the futures side, yes, volatility is what we'll have to wait for.
Understood. That is helpful. I'll come back if I have more questions. Thank you.
Thanks.
Thank you. We take the next question from the line of Rahil Jasani from ICICI Securities. Please go ahead.
I'm sorry, my question was answered. Thanks a lot.
Thank you. Next question is from the line of Aksh Vora from Praj FinCorp. Please go ahead.
So just wanted to know on the margins front, is there any delta between options and futures margins?
When you say
the margins we gain on the profitability side.
So when you say is there a delta, are you saying, can you use whatever unrealized profit or anything towards the other one? I don't get what you say in terms of margin. Margins have to be paid for every contract, and they are distinct, and you need to pay the margins both for your options and for your futures. When you're calculating the margins, especially in the 2 days prior to expiry, we also levy an additional margin, because for the buyers of options who generally do not pay a margin, on the 2 days prior to the expiry, we start levying some margin, because if they are in the money and they exercise, there will be some sort of a margin shock on the day of conversion. So, but I don't know whether I got your question right, so I don't think the answer may be right.
I would say on like if we are earning in terms of earning, if we are earning say 20% margin on futures revenue. What kind of margins we are earning and on options currently? Is there a big difference, or probably the similar margins?
Okay. So you're talking of margins as in our earnings versus... So there we are absolutely same. On every rupee that we earn, there is a percentage of our fees that we have to pay for software vendor. There is a percentage of our fees which goes to regulatory fees, and there's some percentage of our fees which goes to product license fees. So the product license fee is currently not payable for options. So clearly there is a slight delta there. But in terms of the net revenue from both the contracts and thereafter, it's absolutely the same. Profitability on both the contracts, therefore, is the same.
Okay. All right. And just so one hypothetical question actually. There is a very lack of awareness about commodity exchange or the metal-based commodity exchange or the products that we are serving or that is there in India compared to equities. Just my thought was that BSE or NSE, they have a barometer, say like Sensex and Nifty. So, in for laymen, people who don't understand markets very clearly, they have an idea about markets from Sensex or Nifty. So there is no clear any such thing, barometer in commodity. I don't know if it can be possible or no, but it can give a benchmark to compare between equities or commodities, and it can give a little bit of awareness of about the commodity. I don't know if it's possible or no. I just wanted your view on that.
So, couple of things. One, you're right. Index is an extremely useful instrument when it comes to giving you some sort of a gauge of where a market is. And you have spot on that, index is something which people use to track markets. Second, we at MCX have had indices which are both sectoral as well as broad-based commodity index, both of which we have been calculating and publishing for the last 7 years. What we announced earlier in this financial year is that we have done a tie-up with Thomson Reuters. We have branded our index under this iComdex series, where you will see some indices which are broad-based and some which are sectoral. We are also working with SEBI to get index-based trading in commodities allowed. So, absolutely take your point. We are well prepared for the launch of an index. We have the data, we have the ability, and we have the distribution capability for that index as well. And as and when SEBI allows trading in index, we will make sure that we get that message propagated across. So thank you for that suggestion as well.
Thanks a lot, sir.
Thank you. We take the next question from the line of Meet Jagani, an individual investor. Please go ahead.
Hi, Mridang. I was just trying to understand about the prices which MCX platform takes each of one of their international exchange, right? They take the price of international exchange. Why so? And how it helps a local hedger who is having exposure to a local price?
So I am not too sure which commodity you're talking about, but there are the commodities that we refer to international prices are the ones where the exposure itself is very heavily linked to the international price. So if you're talking of something like any one of the metals, if you're talking of even CPO, which is an agricultural commodity, the benchmark price in the world over is something which is determined somewhere. We believe where India is predominantly an importer of those goods, the price exposure can be very effectively hedged by the importer, irrespective of the fact that you're taking a price from a foreign exchange. So the ability to hedge does not go away. In fact, the reason we take some of these prices are because they are the gold standard, if I may use the same word, in terms of what the price should be, and therefore they give a very effective hedging tool. So for many of the base metals, they still look at the LME prices. There are, like I said, CPO still looks at Bursa Malaysia in terms of tracking the price, and the same with the crude oil. It still goes much more in hand with either the WTI, the Brent. So those are the prices to which you are exposed to as an importer or as a consumer of that commodity, and all of our contracts give a very effective hedging mechanism to the investor for that.
Okay, I got your point. One more question, which one of the previous participants also asked. Giving membership to bank will allow bank themselves to trade on MCX platform, or I am misunderstanding something?
So if you see the RBI notification, it allows bank subsidiaries which are currently allowed to do the distribution business of equity and equity derivatives are now allowed to also do commodity derivatives. So this we are talking of bank subsidiaries. Banks themselves hedging on commodity exchanges has not yet been permitted by RBI.
Okay, got it. Thank you.
Thank you. Next question is from the line of Shailesh Chadbar, an individual investor. Please go ahead.
Hello. Hello. Hello.
Yes, sir, you are audible. You may go ahead.
गुड इवनिंग सर. मुझे एक चीज ये पूछनी थी कि अभी जो ऑप्शन ट्रेडिंग चालू किया है एमसीएक्स में, उस पे अभी ट्रांजैक्शन चार्ज लेना चालू कर दिया है क्या? और इफ आंसर इज यस, देन व्हाट इज बेस फॉर दैट?
तो अभी हमने ट्रांजैक्शन चार्ज लेना नहीं शुरू किया है. फिलहाल हमने जैसा पहले भी बोला था लॉन्च के समय, हम ट्रांजैक्शन चार्ज तब लेना शुरू करेंगे जब इस कॉन्ट्रैक्ट में एक स्थिरता आ जाएगी और इसमें जो वॉल्यूम है वो उस लेवल तक पहुंच जाएगा जहां हमें भी कंफर्ट लगे कि काफी अच्छा वॉल्यूम और लिक्विडिटी है. तो इस समय हम उसमें कोई ट्रांजैक्शन चार्ज नहीं ले रहे हैं.
ओके सर, थैंक यू.
कितना जमा है
We take the next question from the line of Varun Dhanuka, an individual investor. Please go ahead.
Yeah, hi. Thanks for the opportunity. I wanted to see if you could add some more color to the decline in volumes that was witnessed on the crude oil. I know you mentioned that volatility was low on the crude front, but we started seeing declines even in the month of October, whereas volatility really just declined a lot in December. So if you could add some more color to the declining volumes on the crude oil that we saw this quarter.
So again, I think if you just look at the numbers, November was particularly actually again back in terms of the crude oil volumes. It was about 5,300 for November. It's only in December that we see a slight decline, and again there it did get compensated to some extent from a natural gas perspective, which saw an increase. So one, in the energy segment and basket, of course, there is people who are using these contracts interchangeably from a trader's perspective. But lack of volatility was probably the only reason why we saw a slight decline in December. Nothing further that we think we can add in terms of that particular commodity.
Okay, thank you.
Thank you. Participants, to ask a question, please press star, then 1. We take the next question from the line of Milind Doshi, an individual investor. Please go ahead.
Good evening, Mrugank. Happy New Year to you. I have two questions. One is, if I look at globally the composition of breakup between future and option volume, it is 90% futures and approximately less than 10% in option segment. So what believes you that you will be able to drive volume in options? And second one, if we are to assume that like NSE, we will have a significant volume in options, then won't your future volume will get affected?
So I think on the second part, the thing is that most trading strategies also look at what is called delta hedging, and therefore a lot of options trading strategies don't really eat away into the futures volumes. So to your point, as and when we see volumes build, we don't believe options will be in any ways a cannibalizing effect on our futures numbers. We haven't seen that even in the current launch, and we don't think that will happen. To your second question, the reason we believe options will do better, and you are absolutely spot on that internationally options as a percentage to futures turnover, especially when it comes to commodities, is probably at about 20% number. The number goes up in India on two counts. One, it is in the equities market that we see that number drastically different, and the second is that within the equities market, it is the index which really does phenomenally high volumes. So our belief as well is that from an Indian trader and investor perspective, index is something which they understand very well, and index-based trading is something which they understand very well, and that is where we will probably see better traction and volumes when it comes to options.
Okay, and my final question would be, we are saying that, because competition coming in, we will still be able to retain our market share. But I want to just take step forward saying, BSE will be offering currency, commodity, and equity segment. And as you know, since it will be a universal exchange, you can, use the same margin. But MCX will not be offering equity segment. So is that going to be a disadvantage to us?
So that's something which you raise an important point, and I would like to take this opportunity to inform all the people on the call that this is one of the misconceptions. We need to work very hard, I know, knowing that this question comes up everywhere. The reality is that even today, the regulation allows for this to happen, and that is because the end investor actually pays margins to a member. The end investor pays the margins to the broker. And since brokers are already allowed to have equity, currency, commodity, all of that in a single entity license, today itself, if a customer walks in and pays some margin to a member who has membership across the segments, he or she can get the benefit of these multiple memberships. So effectively, as the entire market and from our top 150 members who probably constitute 90% of the volumes, we have seen more than 120 of them have as well a membership in the equities currency segment, and all of these members are working towards unifying their memberships. So we expect that in FY18-19, almost our entire membership base will be a unified membership base. And if that is in place, the benefit of this multiple asset classes being available to the end investor with the same margin and across the same screen will be a benefit which will happen without the need of the exchanges getting into that segment. So you have a valid question, but I think it will get addressed with the members unifying, and just BSE coming in with multiple asset classes will not pose a big threat to us because of that.
Okay, just want to add one more color to that probably your thesis may prove right in the long term, but probably for the next 1 or 2 years where BSE wants to capture the market share and offers incentives, probably that may affect negatively to MCX, right? Because they will give lower pricing to attract market share.
So fair point, and I've answered this before as well. We don't think liquidity just goes away because of pricing, but yes, a very aggressive pricing by any new exchange will force us to relook at our pricing strategy and could have some impact in terms of what the pricing result is.
Okay. Thanks, Murad.
Thank you. We take the next question from the line of Rahil Jasani from ICICI Securities. Please go ahead.
Yeah, so just one question. In terms of futures contracts, we had announced that we'll launch around 7 to 8 new contracts, and we have already launched RBD, Pamulin, Pepper, etc. in this year till now. So which other contract are you looking at in futures?
So I think at this point of time, we have just received approval from SEBI for a deliverable contract in brass. We are actively looking at launching that. The reason we are looking at it as well is because in the metals family, on the precious metals, as you all would know, in both gold and silver, we have the expertise and we've been managing deliveries for a very long time. But with this, we will be able to establish the ability to manage deliveries in the base metal segment as well. So that's what we are looking for. And after that, we will think of more launches, especially again within the metal segment. Specific to the energy segment, we are evaluating a couple of energy contracts as well. So both in metals and energy, you should see another 4 or 5 contracts from the exchange in the next 6 months.
Okay. Thank you. Yeah, that's it from my side.
Thank you. We take the next question from the line of Rajesh Chaudhary from Zenith. Please go ahead.
Yeah, good evening. I just wanted to check on the bank subsidiaries. As I understand, like SEBI had given permission to allow bank subsidiaries to be traded on the commodity exchanges. So where are we at the moment?
Yeah, I thought I just answered that in the beginning. Axis is already on board. Their membership is done, and they should be starting business very soon. As for the other top 5 or top 6 bank subsidiaries, which constitute bulk of the market, we expect all of them to be on board within this quarter.
So how much impact do you see in the volumes if they all come on the board?
So I think in the longer run, if they have a similar impact that they have in equities, that should add about 25-30% distribution strength to what we have today.
Oh, okay. And secondly, in the last call, you had mentioned about new products like diamond and rubber being coming onto your platform. Where are we at the moment? And the index futures also.
So it is correct. Diamond, we are still working with SEBI. We don't have an approval. Rubber, we did get an approval, but looking at the market conditions, we decided not to launch. Index, we continue to work with SEBI to see how index-based trading can be allowed in commodities.
Oh, okay. Because in the diamond, would it not be a logical synergy between the current bullion segment if you launch the diamond product?
Absolutely agree. We are therefore pursuing with SEBI, and we hope we can get an approval at the earliest.
Oh, okay. And lastly, by when do you see the mutual funds and the PMS coming on to be allowed in the commodity exchanges?
Like I mentioned, the SEBI white paper closed for comments on 31st of December. We expect that in line with what SEBI has done in the past, SEBI will now take this feedback, incorporate it, and hopefully at the next SEBI board meeting, which will happen somewhere in February, they will approve mutual funds and PMS participation in commodity markets.
So they are also allowed to do some modifications in their papers also, mutual funds?
I didn't get your question.
Basically, they also need to seek permission from the regulator to come onto the commodity exchanges. Are they required to do some modifications?
So I think I would expect that when SEBI makes the modifications, they will do it across the 2 divisions. One is that commodity markets will allow mutual funds, and the mutual funds division will allow them to invest into commodity markets. They'll make changes on both sides.
Okay. And by how much do you see the increase in volumes if both of them come, mutual funds and PMS? Any rough idea, ballpark estimate?
Yeah, let's look at it that institutional participation is always slow to pick up. That's been our experience in equities as well. For those of us who were in the markets way back in 1994 and in 1999 when options were and derivatives were introduced, institutions do take a longer time to adopt to new products. At the same time, I think what it really will do for the market is build the longer term interest, and that's really what we are hoping to get in terms of build out of liquidity in the far end contracts. But would be very early to hazard a guess on what volumes we expect them to generate.
Oh, okay. And do you foresee any mergers and acquisitions happening in this commodity space after the unified exchanges are allowed?
Okay, so nothing that I'm aware of.
Okay. Thank you so much.
Thanks.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to Mr. Sagar Lele from Motilal Oswal Securities for closing comments.
On behalf of Motilal Oswal Securities, I'd like to thank MCX to have given us the opportunity to host the call, and to all the participants for joining in. Have a great evening ahead. Anything from you, Murgank?
No, I just like to wish all of you a very happy new year. We take on the next 9 months as a key execution challenge because we believe that the regulatory developments of the last 9 months have really opened up a lot of opportunities for the commodity markets. So here's to a great and happy executing 2018, and thank you for being on the call.
Thank you very much, sir. Ladies and gentlemen, on behalf of Motilal Oswal Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.